Welcome to LoFiTrader, ladies and gentlemen. We have a weekly review ahead of you. We're going to go over the three major indices, and then we'll take a look at the overall news, and we'll see how we can capitalize in this market in the very near future. So stay tuned. We had the S&P 500 reach an all-time new high. This was absolutely beautiful day for the overall market, but now breaking down on Thursday with a distribution day from the overall indices, S&P being one of them, breaking below that 21-day moving average, and now today, as we record this, coming back up and touching that 10-day moving average. We need this to stay above a 21-day moving average, but breaking below it causes a little fear in the overall indices. QQQ reached a high of 449.34. The tech-heavy giant did a very nice job reaching those highs just a few weeks ago. Now also breaking down below its 30-day moving average, it can be a little weary to see. Now breaking back up, we want to see this thing try to hold above those moving averages, but again, with fear being gripped in the overall market and everything that's going on in the news, we have a tough time believing that it will sustain this beautiful buying power. We will have to wait and see exactly where the market wants to take us. The overall IWM, or the Russell 2000, is just still trading sideways. We haven't seen much out of this except for it wanting to push but getting smacked back down, whether it's from news or the overall indices continuing to pull it back. We'll have to wait and see if the IWM wants to try and continue higher very soon here, or if it's going to continue to be the lagger and pull back further. We are starting to see an amazing boom in this economy. A lot of things are coming out and showing that the economy will not slow down. America still stands strong. The only issue with a strong economy is the simple fact that Papa Powell wants to see the economy weaken. It does sound like a very bad thing, but with heightened interest rates brings people to spend less money. But when the economy's still strong, jobs are still at a high demand, we still see a lot of people with a lot of jobs, with a lot of money, and they continue to spend. This is going to keep the markets spending high and the inflation even higher. This might look bad for Papa Powell when he looks upon this data and ingests it. Unfortunately, with all the death and destruction that surrounds these wars in the Middle East, we aren't going to expect to see gas or oil prices coming down anytime soon. With the rise in gas and oil prices as well, when Papa Powell looks at these numbers, it's also going to increase the overall inflation. So, this all happening all at once on our economy, with our economy showing very strong numbers, I can expect to see a change in those rate hikes. Right around the corner on April 10th is core CPI and CPI data. This data is highly influenced by the Fed's decision to raise or lower interest rates. Just after that, we have the initial jobless claims data on Thursday. So we need to keep a very close eye and pay attention to what exactly is going on with that data. You stay tuned and we will be happy to keep you up to date on that. You know I'm a bear with bull horns, and I'll be very honest with you, I'm feeling a little bearish this week. I think this pop might be signifying a quick drop in the overall market again. If we start to see that, I'll be bearish on most everything. But there are a few key sectors that I would like to take a look into, and I made a watch list for you, so pay attention. The very first thing I would like to look at is XOM. I do have a nice position that I'm trying to add into on this. We had that breakout. It's not over. I do believe it's going to continue higher. EGY. EGY moves 5.1%. If you look at this thing, it's been skyrocketing for quite some time. If you look at when XOM took off, EGY decided to do the same exact thing. This is a lot faster mover though, folks, so we need to be careful when we're trying to position into EGY. Let's wait for a pullback, wait for it to catch a 10 or 21-day moving average, and show a trend. If we can find that, I think we'll be able to buy into this using risk management. Next up is YPF. It is a 3.7 ADR. It's a beautiful mover as well. A little slower than the last one I told you about, but this would be nice to see a pullback, a catch on the 10 or 21-day moving average before this decided to carry on higher. So make sure you're keeping that on your watch list. Next up, we have gold. Gold has been absolutely beautiful, and I've been telling you that GLD breakout has been insane. If you haven't made it to the GLD breakout, then you are missing out. But there has been a pullback and another trend break. You can see it across the board, and it was beautiful. So if you are missing this beautiful run, we need to wait for some pullbacks, and I have some tickers for you to keep on your watch list. IAG, it's close to its breakout area. We want to watch to see it bonk its head, to see if it wants to come down, create new higher lows before taking off with the rest of the stocks. HMY, an absolute beautiful mover. It's a little faster than the normal pace stickers, 4.1%. We can see this thing really get up and go. So if you want to be a part of this, let's wait for the pullback, wait for another trend break, and we can hop on this gold train, baby. Next up, we have GAU. It moves about 7.9%. The ADR is a little bit faster than your average stocks, so what we need to do is wait for that pullback and watch this thing take off. If you want to be a part of it, we need to have patience for the setup so we can make a slam dunk. And last but not least, we have a penny stock for you. This one moves 15.8%, so you need to be careful. This is a make or break the account. I don't recommend playing these unless you are already experienced in penny stocks. So let's be careful with AUMN at 15.8%, but put it on your watch list and keep an eye on the overall ticker. Overall, I just wanted to share my thoughts with you. I think we need to really ingest this data. We need to give the market time to show us whether or whether not we have more reason to have that fear. I'm a firm believer anything below the 21-day moving average in the S&P 500, we need to be hands off, we need to wait, we need to find the stocks that look strong in an overall weak market, finding that relative strength and waiting for it to head to the north side. My name's Dave, I'm with LoFiTrader, and I hope you have a safe and enjoyable April.